With many cities under lockdown, fewer people are filling up. Factories and markets are shut in many countries, and airlines aren't buying fuel because most fleets are grounded.
So we have a lot of extra oil supply that's simply not being used. And that oil has to go somewhere. So if it's not being used, it has to go into storage. But there is a limit to how much oil the world can store.
The US is running out of space. On Monday, that sent the price of US futures contracts for May below zero for the first time. That's because buyers who have to take deliveries from Tuesday have nowhere to store their purchases. And with most end users out of the market, analysts say the rout has been exacerbated by speculators.
Some investors who only want to speculate with these financial products would have had oil delivered. But since they have no use for the oil, they had to sell overnight, which led to the price falling into negative, at least for May.
Analysts say it doesn't mean fossil fuels are worthless, but they also warn that prices will remain volatile for many weeks. The International Energy Agency says global demand for oil has fallen by 29 million barrels a day in April compared to the same month last year. That's the lowest level since 1995. Although sales are likely to pick up later in the year, annual demand is expected to be lower than 2019 by about 9.3 million barrels a day. On Monday, US oilfield services giant Halliburton posted a $1 billion loss for its first quarter, the first of many casualties expected in the industry. US President Donald Trump is planning to stop oil imports from Saudi Arabia to support American producers, and he's also asked his advisors to come up with a rescue plan for the sector.
Like other aspects of the US economy, the oil business is going through a very, very challenging times because of low oil prices, which will lead to less investment and less economic activity and fewer jobs, at least for a time.
And while lower prices may be good for consumers now, the benefits could be short-lived.
Initially, a low oil price sounds good for consumers, which is true in some ways. But there needs to be a balance because oil providers are an important part of the world economy. If the oil price is as low as it is right now, then they're under a lot of pressure and their investment in the global economy suffers.
Many of these producers could go out of business, which would drive up prices and leave consumers with fewer choices long after the pandemic ends. Mobin Nasir, TRT World.
Well, for more on this, Ellen Wald joins us live now from Jacksonville, Florida. She's president of energy market consultancy, Transversal Consulting, and author of the book Saudi Inc. Welcome back to Money Talks, Ellen. Now, it's not every day that you have an oil story that really captures the world's imagination. So let's start with the basics at the moment. So correct me if I'm wrong, but when we look at the oil price on any given day, it generally reflects the price at which oil will be delivered in the following month, right?
Yes, in general. And the fluke, really it was essentially a fluke of the market what happened yesterday with prices turning negative. The contracts for May were about to expire. And really what the negative pricing means is that storage prices were too high for sellers to sell the May delivery oil for positive prices. And but now we're looking forward into the June contracts, and that's really, I think, much more concerning than what we saw yesterday, which was certainly headline worthy, but I don't think it has, it doesn't actually mean that you can show up with a barrel and expect to be paid to take oil. What we're seeing for June, though, are significant drops, 30%, 25% in the price of WTI and also in the price of Brent, which we hadn't seen before, and that's very concerning going forward.
So before we look at the future oil contracts, can I just look at what happened on Monday? Was it simply a case of buyers suddenly realizing not only did they have no use for oil in May, but they had nowhere to store it? Was that what was happening here?
Yes, and essentially, in fact, the oil storage isn't quite filled up, but a lot of it has been contracted for. So they were finding that they bought these futures, and then there was nowhere to sell, nowhere to store the oil, and that's why the price dropped so fast as that was playing out in the market. It doesn't mean that oil is valueless. We still need it. It's still an important commodity. It's less valuable at the moment because no one is going anywhere. So we're not using it in our cars. We're using a lot less of it. But that doesn't mean that it has no value or that in the future it won't have value again.
Now, as we know, the price of US crude has jumped back into positive territory. And as you say, traders are now looking ahead to the June contract and even the July contract. So tell us more about what's happening there. Why are you concerned about the losses we're seeing in those contracts?
Well, the fact that Brent really, was below $20, this is really concerning, and it has to be very concerning for oil-dependent economies like Saudi Arabia and Russia, but there are others too, Algeria, and many more, across the globe that have to be very, very concerned because they're really not making nearly enough money off of these prices right now, and something drastic is going to happen. A lot of people talk about damage to shale oil companies, closures, shut-ins, and things like that. The shale oil industry is very diverse. There are a lot of different companies here, each with their own situation, with their own different contracts for storage. So it's impossible to really predict how that's going to play out. We're not going to necessarily just see massive bankruptcies, massive shut-ins. We're definitely starting to see declines in production, but this has to be something that entire economies that are dependent on this. We have political leaders who are dependent on oil revenue, whereas in the United States, it's an important industry, but it's not the only industry.
So if we're seeing prices collapse right now amid this oversupply as users really can't fill up their cars to take a drive, they can't jump on a plane to go anywhere, why then are producers still pumping oil at such levels?
Well, simply because they have their own companies and they have to keep producing in order to have any revenue at all. And it's also not so simple as just shutting off the taps to a pump. You have to take into concern the fact that they have leases that can expire if the oil isn't used. They also have to think about the overall health of the oil wells. If you simply stop producing, you can do damage to the field in the future. And in some cases, it may actually be better to produce that oil and store it than to just turn off the taps. So really, it's a storage question, but it's not one that is simply solved by turning off the taps, because you could do long-term damage to an asset that is still valuable and will have value in the future.
Okay, Ellen Wald in Jacksonville, Florida. Thanks so much for dissecting this.